Whoa. Okay. Do. Boom, boom, boom. Okay. So DXY. All right. Let's go ahead. So I definitely want to look at the dollar. So here's the dollar. Sadly, this thing is falling out of bed. The dollar is falling out of bed. I definitely could say that with pure and utter confidence. At least that's just how I feel. Okay. Okay. Oops. Scheisse. So here we are. Let's go ahead. Most hedge fund managers look at the 1 month because that's where, or at least that's in my brain, that's what makes the most sense. So there's 6 months. Still falling out of bed. You can see these M's. These are big old M's. See right here? These are some downward trending, sloping down W's. Now I know you can do drawing on these. I used to use quite a few, better than this, but this trading software is pretty good. So what is this? Year to date, 89 strength. Now the DXY is the dollar. It's the dollar compared to other currencies. So 1 year, 5 year. So you can see that we're testing the lows down here. Which, you know, right here is where the repo market had a whole bunch of collapsing. Right around Christmas time, the stock market started to bust. I remember that vividly, and Bitcoin then went from 6,000 to 3,000. It was probably right here when this strengthened, when that happened. Because when the dollar strengthens, other things go down. Because people also have to cover their losses. Especially gold bugs, they don't understand that. But you can see all of this. You know, once we break below 86, gosh, it's a free fall to go test these lows. So, anyways, let's go to Kitco. Pretty sure it's Kitco because I want to look at the gold and silver prices. Now these are manipulated markets. Simply due to the fact that they have so many derivatives built off the top of them through exchange traded funds and other instruments that can take like a one paper ounce of gold and move the price of millions of ounces of gold, you know, and people at coin shops, they actually actually use these prices, but right now they just use these prices to buy the gold and silver off of you. When you want to buy it, it's going to be 25% increased. Prepare for real risk of another recession. Yeah, every fiat currency over time loses its value. It's kind of what you'd expect, I guess, to get from a different asset classes website like gold and silver from Kitco. You know, one thing I do like to always look at too is I like to look at for deals and also put my ear to the ground and see if you can even purchase gold and silver, or if they're running into out of stock issues. I think JM Bullion's the one that I've only bought a couple $100 through them, but it's always super fast, super clean, it's nice, insured. I don't recommend anybody, not financial advice, but I will say that they are my favorites. So on sale. Let's see. Now I know that the mint, where the American Eagles are created, because that's what's the premium American. I want American Eagles. Oh my gosh, it's kicking my butt. Rounds, coins, American Silver Eagles. It's super hard to get. I got one 2020, and their price is so insane. Oh, here's a 2020. Let's check out the price on them. Look, in stock. Okay, pre-sale. 2021. 2021. I would totally go for some of these. These are going to do nothing but go up in price. See, look at the difference from what the Wall Street, the COMEX, which is how they price silver and gold. It's based on the COMEX, and the contracts usually close at the end of the month. Now people can either settle me out in cash, or they can say, no, I'm going to stand for delivery. So let's go back to this. They will say, now I'm going to warn you, it's kind of hot. So I don't got a shirt on for real. But if they stand for delivery, they literally do have to source those. And that's been happening more and more. People have been standing for delivery. Okay? It's not nuts. Alright, that's about as much as I'm going to torture everybody here. So, let's go back. Check it out. So those are all cool. You can see out of stock. A good first amount of this page. Yeah, the inventory stock ain't that a biatch. Oh yeah, silver's gaining some momentum. Personally, I think silver, it makes more sense to buy that. It makes so much more sense to buy that. There's a gold and silver ratio. You can play when gold goes up. You're already in that. Before it starts to go down, you sell the gold, and then you go into silver, because silver lags. Gold will front run it, but silver leverage, it's going to jump from 25 to 35 before you can blink your eyes overnight. Like when it went from $18 to $12 overnight during the whole COVID crisis stuff. It was in $12, and I was already in my coin dealer making a purchase that morning. I stopped everything I was doing to go do it. So let's maybe they got some sales. Maybe there's some good sales. Look, you can't even get it. Even the cheap stuff, $30. So the premium is actually, let's see, 20%, 5%. It's a 20% increase. So even though silver, if you Googled it, says 25, you can't get it for less than 30. That's a 20% premium. And, the force that drives that, I don't see any reason why it would let up yet. Just like the force is driving gun prices is not slowing up yet or giving up or receding. So I don't expect gun prices and ammunition prices to go down. Alright, let's look at some coins. I'll give you some of my hot picks, personal tips, things that I like a lot. Man, it's such a green market. There's hardly any deals. Tron has legit marketing. I mean, Tron, Justin Sun. I mean, the dude is he's a business beast. Young Chinese cat. I think he's Chinese, I'm not sure. But I know what he looks like. I mean, he's gonna leverage his position. And Tron is a good competitor against the EOS network. At least from what I understand. So, let's check out 2 weeks. You know, it depends on how far your time horizon is. So you can see these bottoms. Look, it put in a pretty good W bottom there. You know, no M's. Okay, boom. I mean, look at this. Okay, 0.028 cents. 0.3. I mean, that's a stupid percent increase here. From 2 cents to 3 cents is 50% increase. So, I mean, these are pennies on the floor. Let's look at a month. Let's pretend you want to trade in and out of it in a month. It can go as high as 3.5, 90 days. And it's fairly in the middle. Fairly in the middle of a 90 day. But I do think they're undervalued. They're not Ethereum, so I would ride this Ethereum wave, which will be most of this bull market. Most of this bull market will be Ethereum. If you don't know what Ethereum is, it's oh gosh, Bitcoin is like TCP/IP, the internet protocol, and then Ethereum is like your monthly internet service provider, like how you pay your phone bill every month. That's like paying the gas to use the internet. You're paying for data. To pay for data on Web 3.0, you have to burn Ethereum. You have to burn gas fees to make transactions. And these smart contracts take that, but you can do, there's financial tools and instruments that are being built that are derivatives, that are leverage, that are yield. Gosh, if you want to get into the yield farming, one of them, oh, where is that little sucker? See, wrapped Bitcoin, that's solid stuff. I would totally use that, because at least it's Bitcoin you can use on the Ethereum network, you know, so you can actually do something with it. It's literally taking, let's do this. So it's taking a Bitcoin, okay, and then it's wrapping it up in Ethereum, like a candy wrapper shell, so that it can be traded across these DEXs. What these DEXs are and what these DEXs do, one of them, which is doing as much volume as Coinbase. Now, Coinbase has hundreds of employees, compliance departments. I mean, let me tell you something. The compliance thing is no freaking joke. Let me get you my global regulations. Okay, I'll show you what I've been reading here. And while I do that, oh my gosh. Okay, so here's this. Let me show you Uniswap. Uniswap.io. IO is the power button. It's the power button that it stands for input and output. Alright? So this is a 200 page global report, regulation report for Q4 2020. All right. It tells you a lot of custodying. So if you take your crypto off of a Coinbase or off of these regulated exchanges, you're taking custody of those assets. And it's important because it is a pristine asset class. When you have it, nobody can have a claim on it. They can't take a derivative out. You can lend it out and you can get yield. And that's exactly what I was talking about with, see, DAI is a stable coin that's issued by a software. I prefer this DAI to any other stable coin. Wi-Fi. It stands for yield. Oh my gosh. It's so crazy. It's got a small amount that it will ever Wi-Fi. Where is Wi-Fi? Why do I not even know that? Yearn Finance. Number 38. Let's pull this bad boy up. So look. Yearn Finance. This is legit. Now, the first thing that I personally like to do is try to figure out, is this a micro cap, which is under a billion? Is this a small cap, 1 to 10 billion, a mid cap, 1 to 100 billion, or a large cap like Ethereum, over 100 billion, or I think it's getting close to it, the whole sphere. But so you can see that this Yearn Finance, this is undervalued. It's almost it's 3/4 billion. And this is where people are getting the derivatives. The whole derivative sphere on the this is it right here. Let me show you this sucker when this stuff kicked off, which I don't remember if it kicked off this year. Yeah, it kicked off this year. From zero. I mean, this token is 26 grand poly. 26 grand. But it hasn't even been discovered by institutional investors. Now, believe it or not, there's people out there, people called Michael Saylor as one of them, Max Kaiser is one of them. Michael Saylor, this dude's a beast. He wrote a book 10 years ago called The Mobile Wave. And so, anyways, his company, he took 480 million, okay, with an M, and then he took his personal money, and he bought Bitcoin right before this run up, right before it went from 12,000 to 20, right before PayPal announced their stuff. I mean, so it's getting adoption, and this is why these institutional investors who put hundreds of millions in their brain, Bitcoin going to 1 million is nothing to them. He just put 480 million. That's like people who are managing that amount of economic energy. It'll be nothing for them to be like, yeah, Bitcoin's a clean 1 million, because there's hardly any Bitcoin even circulating right now. The block reward is only 6.25 Bitcoin every 10 minutes. And Grayscale is gobbling it up. Okay? Grayscale is a Wall Street instrument. It's a trust. Grayscale is, first you have to spell it right. But these guys, they're buying up every Bitcoin they can get. It's like 150% of Bitcoins every day. They're buying it all up. I mean, these are pristine assets. I mean, this is their quarterly reports, right? Digital asset report. And this is what you do before you buy companies. You don't Robinhood trade, for goodness sake, okay? Average weekly investment Grayscale Products, Bitcoin Trust. Average weekly invest 2.5 million. Total investments in Grayscale Products 230 million. Average weekly. They buy $18 million worth of Bitcoin a week. Now, not just Bitcoin. Now these money managers are beginning to understand IT concepts. That's how I look at it. Because I work in IT, so you do have to be technically inclined. And that is who Michael Saylor is. He's a technically inclined guy. Super technically inclined guy. Whatever. I lost the thing. Anyways, he wrote a book called The Mobile Wave. He predicted Amazon. I mean, he was in Apple, in Amazon. So he's not stupid. He already made 320 million with his 480 million. So year in finance is gold. Speaking of gold, let me give you another nice little. This is a pick as of today. Now, not financial advice, but Elron is going parabolic right now. Ooh, Celsius. Oh, that's not Celsius, but Elron's going parabolic. Elron is a good, decent. I better slow down before I start saying things like that. Let's pull it up first. Okay, so this is a small view. If we're gonna be in and out, if we're gonna be a day trader, okay, you should first be a 5-year trader before you think you can day trade. 7 days, let's have a 14-day perspective. Okay, look. It's put in this peak, it came down and found support, came up, tested the peak, broke it. New breakout, going up. Okay, so see this? 30-day, 1 month. We go from $7 freaking to $25 freaking in a month. In a month. Look, that's a double. That's Ethereum did 275%. Here's Elron. Elron's going bananas. This is one I will be picking up. So there's your 90 day. All right. So right there, I got you a hot pick. Hot stock pick, baby. Don't say you didn't hear it first. Okay, these guys are good. They're number 54 on the market capitalization. So these are no fools. You can check their white paper, go look in their Reddit community, flip around through their Twitter community, look into the things before you invest real money, because it's great if you make your own gains. And you are the only one liable for your actions. Okay, how to stake on Elron. See, I would totally do this. I think they use eGold. Yeah, EGLD. Let's launch the application. So Uniswap is Ethereum. Ethereum is almost everything that isn't Bitcoin. This whole hype is going to be derivatives, financial products. All of today's Wall Street products already exist in Ethereum, but with this bull market, it's going to solidify. And we're going to figure out who these Ethereum top winners are. I know good things about Polkadot. Polkadot is not a buy for me. I mean, it went up 4%, so it's not discounted, but it's not expensive. So for the most part, altcoins, Bitcoin, everything sideways. I like to come in and look for deals. Okay, Elron, yeah, see, I would totally take that. Sushi Swap, get wrecked. Basic Attention Token, that's issued by this Brave browser, folks. Basic Attention Token pays you. It pays you to browse the internet. Basic Attention Token, I am very bullish on. Okay, another one I'm bullish on. Aave. This is Aave with Link. Link, I'm bullish on Link. It is oracles. It It's where people do verified price check. They check it on the Oracle, and for a lot of networks, Chainlink is that Oracle. Chainlink. I would always get some Binance coin because Binance is they're established, and I don't think they're going anywhere. EOS is good, but it won't be for a good minute. Gosh, you could almost get anything this top 10, top 20, and probably not do bad. Celsius Network, I'm a bit bullish on Celsius Network. Second to the stablecoin DAI. So the Celsius Network. So why don't we show you their 30-day? So Celsius Network is similar to in my mind, I call it like a stablecoin. The creator of the Celsius Network, he created voice over IP. Now, I work on these voice over IP systems, which just means phone calls through the internet. That's how Cisco phones work. If you've ever been a receptionist, I think Alex Mashinsky. If you've ever been a receptionist and used anything that's not copper cables, this guy developed it. He helped put it out in Hong Kong. He saw people who were disconnected from families. If they weren't rich and wealthy, they weren't able to afford the dollar phone calls to call family outside of like the mainland. Well, what it did is voice over IP dropped the price of phone calls, and it made people who weren't rich, it increased business, it increased commerce, it did all these good things. And he saw that transform their culture, that it helped them. And now he's coined this thing called money over IP, which is exactly what it is. Anyways, Celsius Network has like over 100 million in cash. He doesn't do loans. Look him up on YouTube. He's doing good things for the world, and I'm always down for that. 180 days, baby. I'm so bullish on these guys. If you can take the Cell token, you can get rewarded in Cell token. You can get rewarded in Cell token, and these guys are the real freaking deal. Like, rather than doing dangerous, yield farming, risking your collateral, your Ethereum to try to get like 2 or 3 Ethereum a year, personally, I find these guys a safer bet. Okay, modern way to manage assets. You can take out loans against your crypto without losing your crypto. You can get Bitcoin 6% APY. Ethereum does better APY. If you use the US dollar coin, you can get 13%. I personally am not bullish on USDC. But look, that's 13% in a world of what are US treasuries? Let's look at, let's say we have a 1-year time horizon. It's a sad, scary thing. I didn't even need to go into these dirty crooks. Maybe they're crooks, maybe they're not. I don't know, but look. You want to lend the Gov $1 million, you're gonna get less than 1% back. Inflation's gonna just wreck you. Why would you do that? Why would you do that? So here's arbitrage. Here's where the free markets, humans create markets. Markets are inefficient because if there was perfect efficiency, humans wouldn't find ways to make money lending their money. I mean, that's just the story of humanity. So you go in, you can take Ethereum. Now all of these are follow an ERC20 protocol, so they can be swapped across. So Chainlink, okay, Chainlink is an ERC20 token. It's an Ethereum. It's Ethereum network token. Chainlink, it is Ethereum, okay? Look, It's an ERC20 token. That's why you can trade it it's a decentralized, autonomous organization. This is software. It's doing this automated market making. It's swapping these coins. It's matching, peer-to-peer matching. DAI is a stable coin that exists on Ethereum. Even though you come down here and you see DAI, number 27, it is not different than Ethereum. Ethereum can be converted into DAI. Ethereum can't be converted into Litecoin. Ethereum can't be converted into XP. Ethereum, unless you go to a centralized exchange like Coinbase, they can swap it because they have it. But a good amount of these, be aware that they are Ethereum tokens, ERC20 tokens, ERC20. And that's what caused the 2017 boom, was initial coin offerings. People were making these ERC20 tokens, and the ones that have lived and survived, and the communities have grown, and people are working on them openly. And Ampleforth is a good one. They're here. This is where they're at. You don't need to ever leave the cryptosphere. Comp is good. I got excited. Where's that Ampleforth? Let's check on him. Ampleforth, baby. 63. So let's see. Is it a micro cap under 100 million or under 10 million? That's what I want to know, because that's where your big gainers are. That's where you get the big 100x moves. Look, it's under $1 billion. So this one could move. And I know that this is an actual, I won't say it's an infrastructure token, but as far as it having tokenomics, and it's only missing the marketing. People don't even know what it does. I hardly know what this stuff does. But I'm always hearing about it. I know that people like it in the sphere. Why don't we just go to them, huh? And this is where that research and development, you are becoming a money manager watching this. You're learning about this stuff. These are instruments. Like, the only reason I don't know why the heck you would be interested in this. Amples like Bitcoin, except it can be used in contracts. Cryptocurrency, multi-block, yada yada yada, can be used to dominate stable contracts. So here's a lot of technicals. Often acts, fiat collateralized stable code. So this doesn't help me a ton. So if I really wanted to know, personally, I would go to Reddit. And I would post in the forum of crypto and say, could somebody explain to me in my small brain what Ampleforth is? And you will get somebody who gives you an answer. And it's definitely worth educating yourself, because literally your education is money in the internet of value. We have information systems right now. We have the information era. This is a new era. This is the value era. It can now be transmitted. Right? I kind of just want to search. Oh, maybe I got some messages on this sucker. Because I did do a couple of posts. Oh, I got what? I don't know if I got in trouble or not, but I asked about, no, I didn't get any. That's stupid. I wonder if anybody answered what I was asking. Because they were good questions. Oh, I think it had to do with XDAI. Yeah, XDAI. Okay. Anyways, Ampleforth, one that I like. So DAI, Maker. Yeah, there's good ones. VeChain. VeChain is right up there with Comp, Celsius. VeChain, top of my list. top of my list. Let's see, but you want to catch them once they hit the parabola, or right before. You know, you want before the parabola happens. And now that Bitcoin's at an all-time high, people start to look at it, and psychologically they're like, oh, well, it's too expensive. It's gonna definitely crash. Maybe these other ones. And not realizing that they're not money managers and they're not day traders. And you can own 1 penny of a Bitcoin. It's fractional. You don't have to own the whole 1 unit. So it's more or less a psychological bug that we have as humans. Look at this thing. So it's making some fat moves. It's going up. So if this baby breaks and goes up, I definitely would want to be there, because now it is breaking out to all-time highs if it can break this point here. And this is an upward trend. So let's look at, maybe it breaks out in 2 weeks. Who knows? 30-day. Okay, so look. If you drew a perfect line from this bottom to this bottom, you can see that it's an upwards trend. It would hit this bottom. And it's following, it's trending up higher highs and higher lows. V-chain. It does good things. I do know this much. Ridiculous sometimes. Anyways, if you don't have Ethereum bags, get some freaking Ethereum bags, for goodness sake. I am gonna do a trade. I need to get some stuff. And on January 1st, in case the markets go down, you still owe taxes on those last year's values. So make sure you pull money out on January 1st. Pull it out while it's still valued at whatever that value was. Well, let's follow these guys. So maybe it would be better for you to read through the comments, dig through the Twitter. If you're not a consumer of text content, it does speak volumes about your, to me, I would say intellectual capacity, not capacity, but videos are candy, images are candy. Of course, everybody likes candy. But mental stimuli, it comes from reading, folks. Hate to break it to y'all. I'm not gonna Earl Nightingale you or anything like that. ERC20 token. Well, let's just go back before we do an overwhelming amount of information. ERC20. So there's more than just ERC20. There's ERC, 115. These numbers are the protocol. They're a different set of rules and standards that, okay, it's an Ethereum network, but it's a token that's following a 1155 standard. Okay, maybe it's an Ethereum network token, but instead of following 1155, it follows rules are 1404. Okay, video walkthroughs, blogs, features, blah 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 blah. Okay, so these will be developed in the future. I mean, they've literally been set in the index, and they're going to be developed in the future. Just because they're not here today, it's because not enough people can program this stuff. We need programmers. You need people who can write Solidity. And you can learn this Solidity stuff. You can get these courses on LinkedIn. It's cheap. It's free. Solidity is the language. Solidity is a high-level contract-oriented language used for writing smart contracts. Developed by core contributors to the Ethereum blockchain, it's used for designing and implementing smart contracts within the Ethereum virtual machine. When people are running like an Ethereum node or a miner, and I'm making this layman's terms, they're running an Ethereum virtual machine. So a virtual machine, a VM, They're running a virtual computer. It's virtualizing the RAM. It's virtualizing the CPU. It's taking all of that, and it's running that. Oracle is a company that saw all the potential in the VMware, and that literally just basically means cloud computing. I mean, that's how I kind of look at it. When you work from home and you log into your company's corporate software, it's running on like a cloud computing server, and I could be wrong, correct me if I'm wrong, but it's basically, rather than having all these resources you need at your computer, it's got a fast enough internet connection that all of the processing, I'm going to switch to this again, all of the processing, you have a high-speed internet connection with your crappy little laptop, but you're logging in and you need to use these work tools and softwares that are big and bloated and heavy, maybe they're accounting ones. So you rely on that high-speed internet connection because all the processing is being done somewhere else, and the data is happening, processed there, and in real time being sent back. So it's a virtual computer that you're logging into and interacting with, and your local computer isn't actually processing all that, because otherwise you need to download this software, download that software, have all the RAM, have all this fast CPU, all that stuff, which you don't need. Everything's a virtual machine. So let's go back, right? Okay. So there's, I hope you get some bits of knowledge, dropping bombs. Let's take it all back to this, because everything relies on this dollar. The last thing you want to see as a nation is your currency lose its purchasing power on the global scale, because then you have to go back where you can't import things from other countries at the same price, because your currency that your central bank is printing has been devalued. So the recent one, Venezuela, they've had, their currency is like candy wrappers. It's like dang candy wrappers. It creates all this social tension. It's the people at the bottom, the wealth disparity gap between the middle class is evaporated. That's kind of what's happened. Your middle class owns one business in your town, even though it says Popeye's Chicken. Maybe it's a franchise, but a lot of times, like, their owners live there, they work there, they manage them. And the thing that they don't tell people is that they don't tell people that 80% of employment comes from small business. It's not Walmart. It's not Home Depot. It's not Target. That's not where 20% of employment is there. That's 80% of employment was and is for whatever small businesses that might survive. The poor people who are trying to stay compliant by taking the last of their savings and putting it in outside patio furniture and all this crazy, poor attempts to keep their business. They're busts. They'll never come back from that, especially if they're maybe in their 40s, unless they're watching this video. They'll probably never make it back, especially in a whole new monetary system. For goodness sake. Hang on, I don't wanna let you get all that good stuff. Right? So, anyways, there's this guy. He is He's from Argentina. He has a great YouTube channel here. He was in his 20s when Argentinian peso collapsed. And he talks extensively what happened. Like, you have to get water. You have to get food. Like, you have to be able to protect yourself and your family. Because here's the deal. If you can't protect what you have when crime rates increase, you don't get to keep what you can't protect. And it's good for some and it's bad for some. Good people go out and they either get a new employment, play music on the street, do things where new innovation and art can be rebirthing. You know, you can look at street musicians who play music near restaurants. Are having outdoor dining. They're doing better. They're busier than ones that don't have music. So it's incentivized to bring musicians who want to play on the street, get them speakers and mics and amps and things, and then literally get those contracted together with local restaurant owners, typically your higher upper class. But you can see this reemergence of birth, kind of like Renaissance in a way of thinking. In smaller towns, you see it starting to happen in the downtown districts. People, street vendors, but the musicians, you know, it creates new job opportunities for some and destroys some for others. I would definitely keep my eye on this dollar. This is the talk of the global macro right now. At least today, December 17th, Thursday, 2020. A lot of people are having their eye on this. I mean, look, guys, if we go down into these freaking 75 and 70s, that is your that was the 2008 crisis. There was we had 0% interest rate last time. The very last time we got interest rates, and when I'm saying interest rates, I'm talking about those treasury notes. Okay. 10-year. When interest rates are this low for borrowing, pulling credit is pulling money from the future. That's what credit means. Credit means to pull money from the future and spend it now. Last time that interest rates were this low was right before 1929 and the Great Depression. That's called the long-term debt cycle. Within a long-term debt cycle, there's multiple short-term debt cycles. Okay? Those are your 10-year boom bust. Okay? Now we're at the end, at least in our country, of a long-term debt cycle. Every, I think it's 80 years. It's when one generation has died off and things have been forgotten that those people experienced in their lifetime. And it's a generational, it's a demographics push economics like people wouldn't even comprehend. It's part of why people don't realize that a lot of things they're just not really aware of. Some people think it's social, some people think sick, some people think it's blue, or some people think it's red. Very few people, unless you say, what do you think about the US dollar, what do you think about trade, what do you look outside of the goldfish bubble, the goldfish bowl. Anyways, so the demographic thing is a generational thing called a fourth turning. Now, if you want to know more about this, you need to look this up. The fourth turning is is a big freaking deal. Fourth turning theory, or simply fourth turning, describe a theorized reoccurring generational cycle in American history and global history. It was devised by this person. And this is people who manage hundreds of millions, tens of billions. These are things that they're aware of. They watch these things, like, because it's relevant, you know. And if you think, oh, I don't have that much money, so obviously it's irrelevant to me, put your mask on and shut up. Tell me how irrelevant it is to you now. Okay, so it's not. If you're going to say it's not relevant to you, then you should not even be in Bitcoin, because, oh, there's nothing I can do, there's no opportunity, blah, 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 blah. Here I am stuffing it down your throat. I got 6,500 different tokens of opportunity. Where do you want to start? Okay, they all do different things. The legacy system is crumbling in front of your eyes. Wealth from the baby boomers is being transferred to the younger generations, who understand that in 2020 we've printed 20% as much money as we've printed in the last 200 years. Let me say that again. In 2020, we have printed in the USA, our central bank, we have printed 20% of all the money going back to 200 years. 200 years worth in 1 year. Now, it should not shock you why this thing is going down. Now, lumber prices are going through the roof right now. Lumber prices are going ballistic. Now, before we talk about the lumber prices, let's go back to this long-term debt cycle. Long-term debt cycle comes around approximately once every 50 to 75 years. This happens because several short-term cycles, debt cycles, add up steadily. Higher debt servicing burdens. That's one thing people don't realize. It takes income to service the debt. So most of the time people are okay within their business as long as they're cash flowing. As long as they're having some sort of a cash flow, they can service the debt. But in depressions or in recessions, the weight of debt doubles down. That's why when you give a homeless person $1, he damn near cries, because he feels the dollar strengthening. Okay, the dollar strengthening. To him, it's very strong just to have $1. That's why when you have a job in 2020, you feel good about yourself. You feel your dollar strengthening because of all those you see losing their jobs. Okay, that is the dollar strengthening. Debt servicing burdens, which central banks try more to neutralize by lowering interest rates. So now we're at the point Paul Volcker had interest rates jacked up to 20% in the 80s because inflation started to show up. And we'll go into the lumber thing right now, because the lumber's it's doing crazy stuff. People, maybe they'll be building houses in the spring, depending on demographic, like areas and people moving to, but lumber is like almost at an all-time high again, but it's winter. And so like it's not normal, not even close to normal. It's not building season. So a lot of people are expecting to see inflation pretty heavily. We haven't seen it for 4 decades. And we just hit the bottom. We went from 20% in the 80s all the way down to 0. And that happened right before 1929. 1933, the German economy, the wealth gap was so bad that then you have social upheaval. And it doesn't matter. It doesn't matter. Anything that stops the hurt to get people food by whoever, they look at that person as like they are good. They did change all those people's standard of living, like their day-to-day life. And so they just assume, they don't just assume. people will do anything to get out from under the pain of poverty. And that economic energy can be harnessed, and it did get harnessed. The Germans felt it the most at that time. Okay, anyways, so long-term debt cycle, that's all great, good stuff. Let's check up some lumber prices. I can't remember. I know that there's a ticker. There's a ticker. Lumber prices over the market watch. But I don't remember what the ticker was that tracks a lot of these. Okay, of course lumber skyrocketed. But if you want to know more about it, what I would do is I would go to this gentleman on YouTube, Uneducated Economist. This guy's legit. His name's Simon. Been following him since, gosh, he had a few thousand. And George Gammon, who is another great YouTube resource. But Uneducated Economist, he works at a lumber thing. He doesn't need to. He's a humble individual. But right here, lumber price surge. So lumber, he works at a mill. He knows the intricacies. He understands economics. These are your smart individuals. Use them. They're a resource. If you want to understand way too much complicated stuff about macro, I wouldn't even waste my time with it, because the crypto is the new. Why would you learn about the old? I mean, this guy, he does the new. He gets Bitcoin. I remember when he didn't. He was like, it's not even an insurance policy. It's a speculation. But I mean, now he's getting it. You know, some of these guys, I get it. They're yeah. But I mean, obviously, I'll never forget that. So he will explain a ton about these macro forces, and you can move forward knowing this, and you can plan your finances better. You can make money. You can do so, like, people think it's all irrelevant to them. You're crazy as hell. You're crazy as hell. You must not be looking for opportunity. Suck the dirt. Get in the ground. You know, like, if you're not looking for opportunity, man, hit the dirt. I can't even believe it. So, once again, there she is. Hopefully this thing stays in bed. But, there's really, after this support goes, it's a fast from 84 to 74. It's a pretty quick drop there. Not much friction. And with that, I am just gonna say to you suckers, peace out.